Is Luke Robinson, and I am a business advisor here at Collective. And we are your all in one solution, complete back office platform for a self employed individual. And what we'll do, like essentially, you can think of us as kind of a one stop shop for an S Corp, or someone that needs to be an S Corp. The first thing we do, if you don't already have one set up, we'd set up your LLC for you, make your S Corp election, provide the payroll processor because you'll be on payroll, and then we'll take care of monthly bookkeeping as well, and provide tax support throughout the year. And then at the end of the year, we'll take care of your S corp tax return. So we pretty much take care of the whole process when it comes to the S corp. But today we are holding a session we like to call Tax Tuesday. And essentially what it is, it's an AMA. It's an ask me anything, surrounding taxes, best business practices, best accounting practices, um, questions about whether should I be an LLC or an S corp, things like that. So, please feel free to comment some questions to me, and I'll do my best to answer them. But also, get the disclaimer part out of the way. Keep in mind that don't consider any of this legal advice or official tax advice or anything like that. This is just for informational purposes. The tax code is very complicated. I could be wrong on some of this stuff. I don't know your situation. It might not apply to you. So, always make sure that you go talk to a CPA, a tax attorney, or some sort of licensed professional before you, do any before you act on any of this information. But now that we got that out of the way, I think we can go ahead and start answering some questions. And the first question is, I hear all the time that I can employ my children and help them build wealth. Is that a risk? Well, it could be a risk. So here's some things about the tax code. There's certain things about the tax code that you totally can do that is technically, allowable. But, sometimes you need to determine and ask yourself, should I do these things? And one of those things is employing your children. Now, technically, it's possible to hire your kids. There's no reason why your own business can't hire your kids to be employees. But you just need to make sure that it's legitimate. If you're going to hire your children, they need to actually be doing work in the business. Like it has to kind of be like an arm's reach transaction to where, you pay them a reasonable salary for the work that they do. It can't be a sham. It needs to be legitimate. So, because if you ever were to get audited and like if you weren't able to prove that your child was actually an employee, then you get penalized and some other stuff. So it's usually it's not a good idea if you don't have substantiation for it and can't prove that they're actually employees. Another thing is a question that I get a lot: should my business purchase my vehicle? And it's usually a good idea to where if your vehicle isn't directly related to your business, like if you don't own a fleet of rental cars or something like that, then it's usually a good idea to just write off mileage or maybe some actual expenses associated with your business. Because again, a lot of times it's just a good idea to avoid scrutiny, and kind of like to not put yourself at risk for certain things. But again, like I said, that doesn't apply to everyone. So, speak to a CPA or, of course, before you do any of this. All right. What's the difference between an S corp and an LLC? Well, so a lot of people have kind of a misrepresentation about what an S corp actually is. An S corp, it's not a business entity by itself. It's a tax election. So you've actually got to be an LLC or a corporation before or a partnership before you can elect the S corp tax status. So Really, that's the difference. Is an LLC is a business entity and an S corp is a tax election. Why would you want to elect S corp tax status? Well, I'm so glad you asked. That's the whole point of why we're here, honestly. But an S corp, so essentially, before you become an S corp or before you make an S corp election, a big chunk of your money, and oftentimes or a lot of times, all of your money, all of your net income could be subject to the self-employment tax. Self-employment tax, like it's a flat tax rate of 15.3%. So let's just assume, like before someone becomes an S corp, let's assume that their net income is around like $140,000, something like that. Before you become an S corp, how you'd come up with your self-employment tax is you take 140,000 and you'd multiply it by 15.3%. Like all the money would be subject to it. But what happens with an S corp election is essentially you become a W-2 employee of your own business. And it like now it's still your business, of course, like you're still the owner of it, but for tax purposes, you literally become an employee. And since you're an employee, your business will pay you a wage. It'll pay you a salary, like just like you'd receive if you work for someone else, like as a W-2 employee. But the cool thing about S corps is that the only chunk of your earnings that's subject to the self-employment tax is your salary. So, for example, let's say that someone nets, like I said, $140,000, and let's also assume that a salary for someone like that, let's assume that that's around. Oh, 1 second. Let's assume that that's around $56,000. I don't know exactly what your salary would be, but that's just that's assuming a salary rate of 40%. Yours could be higher or lower, and like the salary kind of has to do with your personal situation. But let's just assume that a reasonable salary for someone making 140 grand is 56,000. So that first 56 grand is still subject to the self-employment tax. You still pay it. But the other 84 grand, or just the rest of your money, like outside of your salary, that is considered a distribution on your behalf. Like, conceptually speaking, you can kind of think of that money as dividends almost. Like, some people will use that term when they're talking about distributions. But long story short, that chunk of money is not subject to the self-employment tax at all. So in this situation, an S corp would save this person $12,852 in the self-employment tax. So, once you reach a certain income level, an S corp can potentially be quite advantageous to you. What can we do now that April 15th is over? Well, there's two questions. What can we do now that April 15th is over? And what can I do to be better prepared next year? We'll kind of answer those both together. Well, now what you need to do, especially if you're a self-employed person, is it's a good idea to have your bookkeeping organized. Organize your bookkeeping, get some sort of an accounting software. Just make sure that like you're tracking your expenses. Just make sure you're organizing your stuff. And it just makes it so much easier to file taxes, to handle your business finances, and just for other purposes as well. So that's one thing that I would really suggest is to just make sure that you're prepared financially or organized financially. And then something else is it's usually a good idea to make estimated tax deposits. Now, estimated tax deposits, they're due quarterly. And essentially, what estimated tax deposits, they're tax payments you make to the government throughout the year to pay your taxes throughout the year. Because when you're a self-employed person, you don't have an employer that is taking money out of your check to pay it over to the government. Like you're responsible for that. So really a good practice, or like what I like to tell people sometimes, is you're allowed to do monthly estimated tax payments. Just to help yourself budget a little bit better, just to help you ensure that the government gets their money on time, so you can prevent yourself from being penalized and things like that. I will, a lot of times will suggest making monthly estimated tax payments. Okay. I didn't I didn't file my tax return yesterday. What happens now? Well, really, it depends on essentially it depends on how long you wait. So there's a few things that could potentially happen. One, if you wait a long time and just kind of like don't do anything, then the IRS could potentially file a return on your behalf. And those are called substitute for returns. And when the IRS does that, they essentially just take all the income information that's been reported under your name and they'll file a return for you. And they don't like usually it's less advantageous and you'll usually owe more in taxes than if you would just file the return yourself. So eventually they'll do that. But what they'll do is in the meantime, they'll send you some letters, saying you're missing a tax return. And then if they file a return for you, like I said, it's called a substitute for return. You'll have a tax balance that will, potentially be posted on your account for that year. So you'll owe taxes to the government. And then they might eventually start sending you letters, demanding payment or to set up a payment plan. And eventually, if you don't do that, they have the right once they send you a number of notices, they have the right to start levying your bank accounts or garnishing your wages or sort of levying your accounts receivable. They can do quite a few things. So it's just a good idea to file your taxes as soon as possible, pay your taxes as soon as you can, so you can avoid all that mess. Oh, here's a good question. If the IRS knows all of our payments, why do they make taxes so hard if they already have all this information? Well, first of all, I agree with you 100%. The tax code is too complicated. In my opinion, I guess I should put it that way. In my opinion, the tax code is unneedlessly complicated. It's complicated for no reason. So I totally agree with you there. But the IRS knows how much you've paid in taxes because they have a record of your estimated payments and whatnot, but they don't know how much you owe in taxes. We live in a voluntary tax reporting society, meaning that there are just several rules and situations that will reduce our tax bill or increase our tax bill. So two different people that make the same amount of money with similar income sources could have wildly different tax bills depending on what they put on their tax return, what they're legally allowed to do that year for their taxes. So the IRS doesn't know how much you owe. So that's why they have you file a return is they have you, present information to where you might pay less in taxes. The IRS can't do that for you. But I do agree that the system should be easier. It should be way more automatic. The IRS. So I agree with you. It's very complicated, and it shouldn't be. Why would you want to go with a C corp over an S corp? Well, keep in mind that a C corporation can make an S corp election. So that's the one thing. So but usually C corps, usually if you ever want to go public or, like have more flexibility when it comes to business ownership and fundraising, things like that, sometimes you might want to go with a C corp structure because with an S corp, you can't have more than 100 shareholders in your business, things like that. With a C corp, you can. So, but just most people, for most small business owners, it just doesn't apply to most of them because like they're not, they're not usually interested in going public or having 100 or more than 100 owners in their business. So usually, it just most people need an LLC. How can Collective help me with taxes next year? Well, Collective can pretty much do the whole shebang. And think of Collective Think of us as kind of like I said earlier, kind of like an all-in-one solution for an S corp, or for a business that needs to be an S corp. And the first thing we do, if you don't already have your LLC set up, we'd actually set up an LLC in your state of residence. Like typically, that's the first step. Then we'll make an S corp election with the IRS. That's the next step. We will then provide a payroll processor. Because if you do an S corp, you yourself will be on payroll, with this new tax structure. So, we'll take care of that. And then we would take over the bookkeeping. And we close out the books every month. So every month we'll give you a profit and loss statement, a cash flow statement, and a balance sheet every month for your books. And then you've got someone on your team called a member relationship manager, and you can essentially think of them as your account manager. So if you ever have any questions, want to talk through something, or just need some guidance, you can reach out to your member relationship manager anytime you need. And then, kind of as we run your books throughout the year, at the end of the year, we'll file your S corp tax return, because you'll have one of those now. Like you have a business return that kind of comes into existence when you do an S corp. So we'll file that one for you too. So we pretty much do the whole shebang when it comes to an S corp. What structure do you recommend for a moving company? Well, it's it just kind of depends. I mean, if you're just kind of a self-employed that just kind of owns your own moving company, you might need to, be an LLC with an S corp election. Kind of depends on how much money you make. It depends on how, many people are involved in your business. So like, with many, unfortunately, with so many answers to your question with taxes, it depends. But you could always schedule a call with Collective, and you could talk it through with a business advisor. All righty. Okay. What happens what happens if I didn't get my business returns in on time? Well, they'll probably penalize you. Because a business return, like for example, like like for the late filing, um, because with an S corp you file an 1120S. It's called an S corp tax return. And if the information that I'm reading is correct, if you fail to file an 1120S, and this is actually coming from TurboTax, by the due date or by the extended due date, because remember you can file an extension. So, but the IRS typically imposes a minimum penalty of around $220. Um, that was for 2023, like or for each month or part of the month the return is late, multiplied by the number of shareholders too. So it could be pretty hefty late fees. So it's just a good idea to file those taxes. Do you do live AMAs with other audiences besides Collective? How can we get a live how can we get a tax live stream collab? Well, yes, absolutely. We would certainly, and it might even be me. Like I do some of these events. of course, and so do my colleagues. I have some great colleagues on our new business team here at Collective. But certainly, if you wouldn't mind us sending us a direct message on Instagram, then we'll certainly reach out to you and see if we can partner together and have a conversation. But Collective, we really believe in education here. So, we do a lot of online events, in-person member events. Certainly, like we would love to collab. What's the most important aspect of this tax season in your opinion? The most important aspect. Hmm. Um, well, probably the most important aspect is is filing the return your tax return on time or filing an extension because when you don't so the IRS, like when you don't file a return, you're mainly looking at two penalties. You're looking at the failure to file penalty and the failure to pay penalty. And the failure to file penalties are a lot higher than the failure to pay penalties. So even if you can't pay your taxes, it's a good idea to at least file the return because you save in penalties and interest, or in penalties and interest. But yeah, it's just a good idea to file a return. What should businesses focus on now that tax season is over? Well, two things. One, optimize your accounting and bookkeeping. Make sure that your finances are organized because then you can accurately calculate your taxes for the year and more specifically your quarterly taxes. So that's just kind of a requirement is to make sure that your books are in order. But so those two things. Make sure that your books are in order and you should pay the taxes. I filed an extension but didn't pay my tax bill yesterday. What can I do about this if I can't pay it ASAP? Well, you might want to consider setting up a payment plan. You can usually do that pretty easily with the IRS, especially if your balance is below a certain amount. They might even give you an automatic payment plan. So that's what I would do is get in a payment plan and just pay it off as soon as possible. My business partner and I run a business together but have some disagreements. If I create a separate checking account and run my portion of the business from that separate account, how will the taxes be done? Will the IRS look at the bank account as a whole or treat the separate checking accounts differently? Well, the IRS, I'm not really sure how the bank accounts would work, but essentially the IRS would look like if you have a partnership, which essentially means a multi-member LLC, then the IRS will look at your partnership tax return, which is called a Form 1065. So regardless of what accounts, like what business information happened in which accounts, that information should probably end up on the partnership return. Okay. Can a partnership be an S corp? Yes, a multi-member LLC can elect to be taxed as an S corp. And usually a multi-member LLC is considered a partnership by the IRS unless you elect for the S corp tax status. Then it's taxed as an S corp. And essentially, you need to decide what's a reasonable salary for each of the partners if they're working materially in the business. You'd have to decide some things, and it might be a little bit more complicated than a single member LLC with an S corp, but it's still possible to make an S corp election on a multi-member LLC. Other than the S corp, what are some ways to save on taxes? Well, there's a couple ways. Well, two main ways I would say. One is to optimize your expense write-offs. Because as a self-employed person, you can usually take business deductions for, business expenses that are ordinary and necessary for your course of business. So that's one thing is, optimize your expenses. And then you might want to consider self-employed retirement accounts. You know, there's SEP IRAs, solo 401ks, and that's just another way to, reduce your taxes is to consider retirement accounts. All right. Can a nonprofit make an X corp election? Um, no, I don't believe so. Because it's a nonprofit, I don't think that it would benefit from an S corp election. I don't think that's how it works. I don't think so, at least. Like, I could be wrong, but I don't think so. Okay, I think I have time for one more question here before I have to hop, and I actually have to speak to a prospective collective member. Let me see here. In what state should I form my LLC? Well, usually, and again, like with everything with taxes and stuff like this, it depends. So, be sure to consult with a tax attorney or, a tax expert before you, do anything officially. But usually it's wherever you live, you at least need to have an LLC set up wherever you live, very generally, just to, remain in compliance with the state rules is, a big part of the time. It typically needs to be in your state of residence. And that is all the time that I have today. Like I said, I've got to hop for a call with a prospective collective member, but I enjoyed it like I always do. And please, I hope to see everyone next week for another Tax Tuesday, another session. And if you're interested, if you thought this was useful and think collective could be useful for your business, you might want to consider scheduling a call. Go to our website collective.com. Take a look at the tax calculator, see how much you can save with an S corp, and we're looking forward to speaking to you soon.